All right, good afternoon now, folks, as we head into US trade on Wednesday, the 25th of October. Now, the moves we've been looking for this week have actually decided. All right, then. Good afternoon, folks, as we head into US trade on Wednesday, the 25th of October. Now, we released the video on Monday, having a look ahead to the week, and what we were hoping for at the beginning of the week has begun to play out. Our thesis was kind of stocks lower, yields higher, bit of dollar strength, which is how markets moved last week and have been moving for a while. But, reason being is that we come into this week and we're expecting strong GDP figures. We were expecting strong earnings reports off the back of strong growth. We're also expecting potentially a bit of higher than anticipated inflation once we get around to it for Friday, which will fuel the higher for longer narrative, which will fuel expectations. Maybe not for another interest rate hike, but will keep the Fed open to that further interest rate hike, which they did suggest at their last dot plot. With the ongoing Middle Eastern crisis, I mean, is that really affecting markets too much at the moment? No, not quite. But ultimately, at the end of the day, that is still geopolitical risk, a risk that is in markets. You can see Alphabet shares, which is Google's parent company, hits 2-month low of the company's Q3 cloud revenue misses estimates. Actual earnings relatively positive across the board, but Alphabet shares hit 2-month low. Alphabet selling off, which is helping to drive stocks lower. But at the end of the day, sterlings have been relatively positive, which was what we were expecting heading into this week the with the strong growth figures over the course of Q3, as that then has implications across the board in terms of markets then going forward. But we'll have a look quickly at this, at the grid. Slightly delayed by 10 minutes, this feed, but you can see stock indexes, the S&P down 0.7%, the Nasdaq down 1.3%, the Russell down 1%. US stocks have taken a turn for the worst in today's US session so far. US bonds, you can see yields higher across the board. Global bonds, yields higher across the board. So interest rates higher across the board globally, helping to put a bit of pressure on top of stocks. You can see the US dollar strength, which is moves we kind of have to be a bit patient for, but that's what's playing out now. The Australian dollar, Kiwi dollar have taken a turn for the worst. They were the strongest currencies across the board this morning. Now they are anything but. The Japanese yen, a bit of strength. So clear risk off trading across the board. Really, it is what we were expecting heading into this week. You can see the US dollar, bit of strength again across the board. Your Aussie, Kiwi, Euro, and Sterling all lower. Dollar Swiss, dollar CAD, dollar yen all higher. Dollar Swiss, dollar yen not doing too much. Yen slightly bid. Swiss franc slightly bid, potentially off a bit of safe haven flows, but the US dollar index continues higher as well. Stock indexes, you can see the S&P, the Dow Jones, the Nasdaq all taking a turn for the worst so far in the US session. The Russell as well, plus European stocks are now following suit. We can see the DAX, the Euro stocks, the FTSE, some not great earnings reports out of Europe so far this week. Obviously, that is in line with a flailing European economy. Bond yields higher, 10-year higher, 2-year higher. 10 years up through these highs. We were looking for a test of 4.9%. That is what we have got. Now, do we make our way back up towards 5%? That then will cause increasing pressure on equity markets and give increasing support to the US dollar. Oil not doing too much. Gold popping higher, which is interesting. The expected yields are going lower. Gold to go lower as well. But gold rallying pretty aggressively at the moment. I mean, have a look at this on a 5-minute chart. It's blasting through on the 5-minute chart, which is, I'm not sure if something's really happened, to be honest with you. I'm not sure how that affects the price of gold like that. But I mean, aggressive moves higher in gold. A bit of a safety play seems it, with equities taking a turn for the worst. Right. Have a look here. It's not exactly driven by any economic data. I mean, mortgage rates higher, 7.9% at 12 o'clock. Taking a bit of time for that to filter through, but we're just ahead of the Bank of Canada. Keep an eye on that. Listen to our video earlier on about what to think of the Bank of Canada, but inflation figures aren't surprising to the top side. GDP figures aren't surprising to the top side. The unemployment rate has risen over the last number of months. It's held firm held at 5.5% the last couple of months, but before that it's risen from near 5%. So not really a reason for the Bank of Canada to hike interest rates. They are likely to stick to the script, and they will hike if necessary, but can't imagine that they will do anything out of the ordinary. So we'll await some home sales figures, 3 o'clock out of the US, but ultimately stocks lower, dollar higher, yields higher is how markets are moving at the moment, and that is what we expected earlier on the week. Rallies being sold at the minute. Was probably likely to continue throughout the rest of the week, I would imagine.